Morning everybody, Mike Niemiec here with some early morning grain and oilseed comments for Monday, June 2nd. Well, we're starting off a new month pretty much the way we ended it, on the defensive. We have the wheat market overnight down around 7 cents, the corn market down 4 cents, the bean market down anywhere from 5 to 10 cents, the meal market down around $3 to $4, and the soybean oil market down around 10 points. Pretty much most of the markets making new lows for the move. We are seemingly on the heels again from a weather, crop progress, and conditions, where the weather forecasts at this point in time continue to remain conducive towards the establishment of a crop. And our crop progress, looking at 95% of the corn being planted, beans around 80%, pretty much at average or above, also limiting the buying interest. And then this afternoon we're supposed to get our first crop ratings for the corn market, and the trade is looking for a number on the plus side of 70% good excellent. So all that combined is a negative scenario for the marketplace, and thus the follow-through selling that we saw at the end of May. We'll also have our exports coming on out this morning. We'll see what we're doing with wheat, corn, and soybean export numbers. Wheat and corn, as we move our way forward in here and trying to establish a crop, is finding out that world values around the world as far as exporters go are falling in price levels, and they're becoming more and more competitive to the U.S. And so as we try to establish our crops and try and get an export program going, we're going to find out that other world suppliers have the supplies, have cheaper prices, and we're going to have to go and try and match them, thus another negative scenario. Somewhere down the road that will also pertain to the bean market as far as trying to grow a crop there here in the U.S. But once again, we seemingly are still doing bean and meal business, and that continues to give the nearby contracts, the July that is, a little bit of support as far as spreads go, so we'll continue to keep an eye on that. And then perhaps the final ingredient as far as a negative scenario goes here going forward is the commitment of traders report. Came on out showing that managed money is still net long across the floor, although since its release of last Tuesday we feel that at least in the soybean oil market, a net short position by the managed money has been established. So all three combined, that being the weather, exports, and positions, all look to have a negative bias here going forward for the month of June. And if that continues, we'll look for more further liquidation by the commitment of traders, getting out of those net long positions, and thus perhaps down the road weaker prices than we're currently at. Once again, these are my opinions, not that of ADM or ADMIS. Thank you.